Here's a shocking reality check. India's diamond polishing industry, responsible for refining 95% of the world's diamonds, is staring at a staggering 28 to 30% revenue plunge this fiscal year, thanks to a 50% tariff slap from the US. But here's where it gets controversial. While some argue this is a fair trade retaliation, others see it as a disproportionate blow to an industry already reeling from a 40% decline over the past 3 years. CRISIL Ratings warns that this could shrink revenues from $16 billion last year to a mere $12.5 billion, marking the lowest point since 2007. The U.S., historically India's largest market, absorbing 35% of its polished diamond exports, has become a tough terrain. The double whammy of 25% reciprocal and 25% penalty tariffs, effective this week, hits hard for 2 reasons. First, the industry's razor-thin margins leave no room to absorb the extra costs. And second, passing these costs to consumers in a market with waning demand is nearly impossible. And this is the part most people miss. Lab-grown diamonds have already snatched 60% of the U.S. market by volume, further squeezing natural diamond revenues. The fallout? Operating margins for diamond polishers could shrink by 50 to 100 basis points, squeezing their credit profiles. CRISIL's analysis of 43 major polishers, representing a quarter of the industry's revenue, paints a grim picture. Even proactive measures like ramping up production in July and August to meet U.S. festival demand couldn't offset the 18% export surge, as Chinese demand remains sluggish. Rahul Guha, senior director at CRISIL Ratings, bluntly states, revenues are set to hit their lowest in over a decade. While domestic consumption in India has been rising, it's not enough to counterbalance losses from the U.S. and China. Even the UAE, now a dominant export hub with a 20% share, comes with risks of a revenue downturn. Here's the controversial question. Can India's diamond polishers survive this storm? The industry's survival hinges on 3 strategies: boosting domestic sales, exploring alternative markets, and setting up polishing hubs in trading centers. However, rerouting via low-tariff nations like the UAE or Belgium isn't a silver bullet. Most diamonds would still be polished in India, attracting higher tariffs. U.S. retailers, already grappling with falling demand, are unlikely to absorb the tariff costs. This means operating margins, already down from 5.5% in 2023 to 3.5 to 4.0%, will face further pressure. To stay afloat, polishers are cutting inventory, while miners reduce production to stabilize prices. Yet timely collections from international clients remain a challenge. Himang Sharma, director at CRISIL Ratings, adds, while low external debt has kept capital structures stable, shrinking operations and profitability will test credit risk profiles. Interest coverage could drop from 2.3 to 2.5 times to just 2 times. Looking ahead, the demand for natural diamonds in key markets must be closely monitored, given the volatile tariff landscape and geopolitical uncertainties. What's your take? Is this tariff hike a justified trade move or an unfair blow to an already struggling industry? Let's debate in the comments. Your perspective matters.